What up, guys, and welcome to the coffee shop. This is your host, Baristo, and this is a quick little free indicator for you guys. It's called the Dynamic Producer Pro Index, okay, or the PPI. Now, first, let me tell you what exactly is the PPI. The PPI, let me go back to last week, for example. Okay, so there's my buddy Noor, who's part of a trading group that I'm in, and he lets us know when news releases are going to come out the next day during our trading session that could potentially affect our trading process or strategies for that day, right? Now, you've all heard of the CPI, which gets announced in financial markets and financial news releases. There's also something called the PPI, and that is called the Producer Price Index. Okay, so the Producer Price Index mainly covers certain things about giant, really big investors, and it's checking on the goods and commodities that are supplied and produced for the country that they're in. Okay, so for example, if you're in America and you're listening to the PPI, then what you're listening to is how well manufactured goods, industrial goods, agricultural products, like crops, livestock, dairy products, raw materials like for mining extraction, lumber, things like energy products like electricity and gas, as well as services like healthcare, transportation, domestic airlines, financial services, all that stuff, right? It covers all of the basically infrastructure that is created and produced inside this country that is for this country, right? So they're basically giving out a news release that's letting you know, is this particular piece of infrastructure, is it operating at its base value, or is it operating above or below its base value? And that basically tells major investors, should they still invest in that specific commodity or not, right? So the base value is known as a performance level, and the performance is 100%, which is a standard. If you are operating at 100% and producing at 100% that you're supposed to, then everything is all cool and copacetic. Everything's just all kind of nominal. But if you are operating at above 100%, basically, if you are producing livestock and producing milk and allowing construction projects to take place at more than 100% of the expected return, then you have a very good and very interesting market that people are going to want to invest more money in, right? So that's what this PPI has done. I have looked for the PPI on TradingView, and the only ones that I found were indicators that basically told you that there's a PPI news release. Well, that doesn't really help anything. I want to be able to look at the Producer Price Index value and know, is it above or below before the news release comes out? That's what I want to do. So that's what this essentially does for you, right? So let's just kind of take a look at a couple of things that are like here, right? So you basically have this, midline that's right here, which is the 100% value. The scale is covering percentage, okay, not like dollars or anything. It's giving you a 100% value. And basically that means if the PPI, which is this yellow line, if it's at 100%, then everything is good, right? That means you are at 100% of your return like you're supposed to. But the minute you start moving above 100%, then you become very valuable. If you fall below 100%, you become less valuable. So in the terms of like how it correlates to market participants, if you are above the 100% value, right? If you're above the 100% value, then buyers are in the market. If you're below, then sellers are in the market, or this commodity is good for buyers and otherwise it's good for sellers. But there's something that tells you, is it a buyer's or seller's market? You have these convergence lines, okay? When this red one is on top, it is a seller's market. So when this comes above the 100%, you don't want to be in a seller's market. You don't want to be selling in this market, right? Because this is the seller's market, right? And then it turns into a buyer's market because these two lines, right? They converge right at this point, okay? And then it becomes a buyer's market. That's just how it works, right? Let's kind of zoom out here. You can see again, like this all is a seller's market. This small part is a buyer's market. This is a seller's market, okay? And here's your value, your 100% value, and you are either above it in a buyer's market or you're below it in a seller's market, and you could be the wrong way around at certain times, right? So that's essentially what this PPI tool is doing. It's letting you know based on the asset that you're looking at, okay? I've been able to convert the formula that makes this work so that instead of looking at commodities, right, and produce and products of the country, I've been able to convert it so that it will look at whatever asset you have on your chart. That's really cool. This is a one of a kind as far as I know. I haven't seen an indicator like this. Now, how do you know when you should and should not be getting into certain trades? Well, you don't want to be getting in when the market has no volatility. So let's talk about that real quick, right? There is a background color that shows up here when the market starts ranging according to your ATR settings. So you have to be comfortable using the ATR, right? This gray area shows up, and you can color this whatever you want. This gray area shows up when the market starts to range, and it stops showing up when the market becomes more volatile. And as a visual, and a secondary visual standpoint, you can see, like if you're scalping and you want to watch candle by candle, then you can see when the market was volatile and when it's no longer volatile. Now, what do these numbers mean, right? You know, pre-volatility ratio and volatility ratio. So volatility ratio is the current candle. Pre-volatility ratio is the candle before, like the previous candle, okay? This is telling you volatility ratio on the previous candle was greater than 1, all right? But now it's less than 1. If volatility is less than 1, you have no volatility in your short term, okay? And the reason I say in the short term is because you need your long term from way ago. You need your long-term volatility to be low, and your short-term volatility, your current volatility, has to be higher than your long-term volatility. So there has to be a difference between the two, okay? Your short-term has to rise up while your long-term has to kind of stabilize. And that way you have a stable market in the long term, and the short-term starts to move. This is great for scalpers when this happens, okay? Now, getting into the ATR settings, let's take a look at settings for the tool, okay? So you have the ATR lengths right here. What I like to do is I like to use a look back period of my choice, right? I'm using a 50. I'll also use a short-term ATR, right? That is relative to another indicator on my chart, because this is not a buy-sell indicator. You want to use this in tandem with another indicator on your chart. We all know I like using the RSI, especially my versions of the RSI. So the RSI I use has a 14-period length. I'm going to use a short-term period of 14 or 7 if I really want to get risky. And I will either double or triple that, right? And for my long-term ATR, I want to go for basically the same as my look-back period, right? So if I want to look back 50 candles, I want to know the long-term ATR of those 50 candles, like what's going on there. And then the short-term, I just want it to be relative to another indicator that has a shorter look-back. Now, the part that confuses people with the ATR is this, the multiplier, okay? The multiplier. You can only on this get between 1 and 3 to multiply. Now, here's the reason you need to multiply, or you don't. If you're multiplying by 1, it's not changing anything. If you're multiplying by anything greater than 1, it's kind of exaggerating the price movements. It's exaggerating the percentage movements in the indicator. The reason you want to do that is because if you get into markets that are like Asian, Tokyo, Sydney market, like if you get into low volatility markets, if you're trading on your charts and it's the middle of the night, okay, if you're just doing low volume markets, you want to raise the multiplication. You want to do that. You want to multiply what you see, because you need to force the ATR to move and look at, to exaggerate price movements so you can see what's going on. There's almost no movements in low volatility markets, so you have to multiply it. But if you are normally trading in high volume markets, you simply keep this at its lowest value and you'll be fine, okay? So the other settings, you'll be able to figure them out on your own, but I wanted to cover this ATR section, for you guys. And there's my little bambina down there, my little barista, telling me that it's probably time to go to bed. Go on. Okay, there you go. Anyway, so the other settings you'll be able to do on your own, and yeah, so I just want to make sure that I cover the short-term and long-term ATR as well as the multiplier for it, because a lot of people may not understand quite how to use that. So I hope this tool works for you. It's simply going to show you, are you in a bullish or bearish market? That's really all it's for. You're really supposed to pair it off with another indicator and just kind of see like how well the market is moving in your favor. So yeah, so that's it. Any questions, ask them below. Go ahead, go to Coffee Shop Crypto and ask some questions over there. Be able to ask questions about this indicator anywhere you want. Go and hit the Discord button and you'll be able to get some stuff in there too. All right, so peeps, there is the Dynamic Producer Price Index. Go and get it from the link below. Have a blast with it. And yeah, I will forward you guys special links if you want to get involved in a group discussion on how to use this thing. All right, cool. Peace.